Welcome back to Policy Bazaar. I'm Arjun Bhagat and we are now taking your questions. And the first one is from Amit Srivastav, who's written on Facebook, I'm insured under family floater health policy from a private insurance company. Now, during the first year of the policy, my wife was diagnosed with cancer and got operated, and the health insurance company helped on all hospitalization claims. Last week, there was a renewal of the policy and I wanted to enhance the sum assured for which the insurance company denied verbally, as there was a claim in the first year, and renewed the policy. With the old sum, they said they will not increase it further. I had written to IRDA also. Now, if there was any provision for the disease like cancer for enhancing the sum assured during renewal, but IRDA asked me to speak to the insurance company only as it is their discretion. So what should Amit do in this case, Yashish?
Well, first of all, I feel sad about the situation, but there is actually very little. I can give a bit of advice. What he could try is to get additional cover from some of the other insurance companies. They are young with the declaration, and maybe one of the companies does provide cover, but I think the hope is very less that some company would provide the cover. I think the companies are obviously, they have identified as a risk that the cost could recur, and they would be reluctant to provide a cover at this stage. Now, ideally, just for the other viewers, what I would suggest in a situation like this, or expecting a situation like this, is to take a critical illness plan along with your family floater, because for the critical illnesses, the cost can be a lot higher than the standard health insurance plan. So if you feel comfortable with the 3 lakh, 5 lakh rupee health insurance cover, that is perfectly fine. But take a critical illness cover, which is almost twice the sum assured that you've taken on the health plan. So if you've taken a 3 lakh or a 5 lakh health cover, take a additional 6 lakh or 10 lakh rupee critical illness cover, because that would come in handy in such situations.
And in this case, the company would not be reluctant to give this?
No longer. See, the very simple thing with insurance is it is a risk that somebody is willing to cover, not a near certainty. The closer you get towards insurance cost starting to become a near certainty, or closer and closer to a certainty, the less they are likely to be covered by insurance, and the more you have to financially plan for them. And that's basically the way insurance works.
Right. We've got another person who's written to us. Kapil Gupta writes on Twitter, I'm a working professional, 24 years of age. I want to take a health cover plan for my parents, father 56 and mother 50. My father is diabetic, but the sugar levels are under control, and my mother has blood pressure related issues. Now they're living a healthy lifestyle and managing their health. I want to take a long-term plan, say lifetime, or a minimum of 10 years for both of them. And my queries are, which is the company that he should go for? Should I go for a family floater or cover my parents, or cover both of them individually? And what would the benefits be for the long term?
So my view is, I heard a number there which I'm slightly worried about. He said 10 years. Those are typically the investment come health plans, which come for a 3-year, 10-year duration. Please do not go for those.
You were advising against even earlier.
Please do not go for those. You could go for Star Health, Bharti AXA, Max Bupa, Apollo Munich, Religare Health, Bajaj Allianz, any of these plans. I would also advise, do not go for a family floater plan. Your parents are in the 50s. I'm assuming you are in the 20s. As the next 10 years come by, they would be in their 60s, you'll be 30s, then 40s, 70s, and you are very different risk profiles. And so you don't want your cost going up just for your parents' cost. I would say within the next few years, please take a plan for yourselves, but for your parents, take individual plans. They will typically cost them about 7,000 to 10,000 rupees each at this stage, and you can get a plan which can last a lifetime. So most
7 to 10,000 rupees each for a cover of.
This is going to be for a cover of about 5 lakh rupees, and I think you should take those. And after that, you shouldn't have you should take a lifelong renewal plan. Of course, the cover will go up with time, but at least they would be covered.
Right, Yashish. We've got Karun, who writes to us from Bangalore. I'm planning to buy a health insurance and a pure life insurance plan, not an endowment plan. I have shortlisted ICICI Lombard for both of them. Which one should I go for?
So ICICI Lombard does not have any life insurance plan. So I do not know which plan they have chosen. Of course, if you've chosen a health insurance plan, please proceed with that. I would say before proceeding, just look at the various options available. At least take a plan which has, you know, a guaranteed lifetime renewal built into it. The Lombard plans do so, the Max Bupa plans do so, the Apollo plans do so, the Religare plans do so, you know, increasingly, I think the Bharti AXA plans also do so. So have a look at those, have a look at where you get what coverages. Look at your, by when do the various pre-existing diseases start getting covered, what are the restrictions, and you know, what are the sublimits. So sublimits are essentially how much room rent is allowed, how much is the capping, etc. Look at those features and make your decision. And I think it's a good thing to go for a health insurance plan early enough.
Right, we've got Pramod Dhingra from Ghaziabad, and he says he earns 70 lakhs per annum. And as a query, he says, I'm 30 years old, married and working with an MNC. My company gives a life cover of around 40 lakhs and health insurance around 2 lakhs, and that covers the parents, wife and a 6-month-old child. Now, apart from this, I have LIC Jeevan and Jeevan Anand policy with a premium of about 15,000 rupees. Till now, I have given only 4 installments and 1 ULIP plan, LIC Wealth Plus. For this, I paid 3 installments of 20,000 rupees each. Now, he says, I was watching a show of yours where you advised to avoid mixing insurance and investment. So now I want to know, how should he go about separating the two?
So see, the plans that he's spoken about have got a very small component of insurance and are largely investment based plans. My view is they are very limited. The 40 lakh cover is also very limiting. If he's got a 70 lakh rupee salary, then 40 lakhs is a very small life insurance cover. He should go for something in between 3 to 5 crores, maybe even 7 crores. On the health insurance side, his company is providing a 2 lakh rupee cover, which again is very small. He should go for perhaps a 6 lakh rupee cover, and he should take about a 10 lakh rupee at least critical illness on top of that. The plans specifically that he's spoken about are whole life plans. So these are plans that cover you up to a certain age and then give you the money back after a certain age. They are okay. All these plans typically give you between a 3 to 6% return post-tax, which is not so bad. FDs give you about 6.5%, and they also give you some insurance in return for this. But they're not great plans. They're not plans I would advise you to buy. If you bought them, keep them going. If they are not bothersome, if it's a trouble, you can get rid of them. It's not a big decision either way. At his salary point, it's certainly not a big decision either way.
Right, we've got Balwinder who writes to us from Delhi. He says, my brother has multiple sclerosis, and does any company provide health insurance?
I think it'll be very difficult
because it's an existing condition.
It's an existing condition. It's a certain condition. Now you need to plan for it. I don't think it's a risk any longer, and it's very difficult to get coverages when something is not a risk any longer.
All right, let's take our next question. We've got Sachita Nanda from Dharwad, Maharashtra. Now, he is 55 years old. His parents are 84 and 74. And he says that his mother has a heart disease. Now, can he still buy an insurance for both of them?
I think he could try with Religare or with Max Bupa. He might get a policy from both of them. I think there's a higher chance he would get it from Max Bupa. They're a little more lax in allowing people in. But the cost would be high. It would cost about 1 lakh rupees per year per person. He would have to take individual plans, which is a decision for him whether he wants to spend 1 lakh rupees.
So you're saying 1 lakh is
a year? Sorry,
a year.
1 lakh rupees a year. He would have to take a cost of about that much if he has to get them covered per person, approximately that much.
Thanks, Yashish. Now, that's all the time that we have on this show. Our next show will be on tax planning. So do send your questions regarding tax planning. Our address is ask.policybazaar.com or Facebook/PolicyBazaar India. And on Twitter, users can write to us at PolicyBazaar_in. That's all on this show. Keep watching Policy Bazaar.